Boom. What is going on, guys? Welcome on into today's stream. Right now, we're looking at the IWM, the market right now. This is the Russell, down roughly it was down like 2.5%, down 2% today. A lot to talk about here today, especially going into next week. There's actually a lot of reasons why I'm very bullish right now, despite not hitting down to some of the targets that maybe I would have liked to have seen. But again, right, as we kind of progress over time, things happen, right? Things happen and things kind of change your thought process. And so that's kind of what I am seeing right now. It could be totally wrong, right? But I do like what I'm seeing if you are bullish. So we'll kind of talk about that here in a second. But that said, let's jump into the market first. So SPY, I got a lot of kind of stuff going on this chart, but SPY's pushing up, potentially going to push over the high of the day actually here if it can get a little more juice. Another like $1 move to the upside, and we're pushing high of the day and potentially filling the gap or trying to fill some of the gap down from last night. So we'll see if we can get some of that. I don't know if we're going to get that fill. That's a lot, but we'll see if that happens. Or if we get rejected up here towards high of the day that we hit this morning and then come back down towards VWAP. We'll see. But that's what we're looking at on SPY. But the big picture on SPY is this right here. We closed below this level for the first time. Realistically, this trend line for the first time yesterday. And the result was a gap down. The result was a pretty big move down, like we saw today. So am I surprised? No, not really. Only reason I am kind of surprised is because it was pretty blatantly obvious. When I say blatantly obvious, I mean just like based on what everybody was saying on social media and Twitter and this and that yesterday, like it was like, yes, we all are seeing it's breaking down, and it looks like from a technical perspective, we're going to have a pretty nasty day tomorrow. And we kind of got that. It's trying to rebound here. I mean, is it that bad? Compared to what we saw on Tuesday, it's not that bad. Let's be honest. And it depends where you are, across SPY, QQQ. QQ is actually not even down as much. IWM is taking a bigger hit today specifically, but yeah, it depends where you are and where you're looking, right, as to where the most pain is, I guess. So this is our target. We got kind of close down here to around 379 on SPY. I don't know if we're going to get that. My concern is going into next week, we shall see. Anything could happen. We got a pretty big gap down. I would like to see it at least come back, fill this gap for further downside. So push back up towards that 390, get rejected, then come down. That's what I would like to see for us to kind of have a healthier move down to that 379 or 380 area, and then maybe bounce from there, and whatever happens from there, we'll see, probably up to Powell and the Fed right next week, which we'll have a stream for on Wednesday for the entirety of that. But there's a lot more we got to talk about. So we'll cover that here in a sec. I'll see people jumping on in. A thumbs up button. I really appreciate you guys hitting the like button if you can. I know I don't say that enough, which definitely prohibits the reach of the streams because I don't say hit the like button. So if you want to hit it. But it helps out a ton, and hopefully get some more good ideas flowing in the chat. So ready for the bounce. Here's the thing. Let's get into it because I think it's time to actually look at this in more depth. But we've been talking about this kind of a lot, right? Small caps, certain growth names actually kind of holding up. One example was Palantir. I just happened to be pulling up Palantir for an example of like a tutorial video that I was doing. It's down 7 or 2.5% today. But if you look at Palantir though, over the past like month, this is on Robinhood's chart. Don't ask. I mean, I don't know. I had it up on Robinhood, whatever. This thing is actually doing pretty good. I mean, it's like holding up pretty well over the past month, all considered. You would think this would be getting annihilated, but a lot of these stocks have given back or have given up a lot of these gains already. So how much more downside are you going to see in some of the growth names? Not as much as what you could potentially see in SPY, or you can see in some of these bigger, large cap stocks that haven't fallen as much and have held up decent until maybe now. And that's kind of why we're seeing, I think, heavier pressure on the indices, and it depends on where you're looking, right? Some stocks are stronger than others. By example today, NVIDIA. Believe it or not, NVIDIA is up. What the heck's going on here? But NVIDIA hit new lows, and NVIDIA's been getting destroyed. So, you're going to start to see that some differences and some, relative strength, right, in the indices and depending upon what we're looking at. So we're having some strength into the close right here. But let's talk about why what are the reasons, or what is like one? I want to simplify it down to one reason. Simply put, one pretty big core reason to be bullish into next week or just into the near future. I don't like to time it up as next week. If you buy options, you give yourself a couple of weeks of time, give yourself about a month, and you're probably fine for these types of swings. Generally speaking, the more time, the better, and depending upon what you're playing. But buying shares, not as big of a deal. But let's go over here. Click on the refresh button right here on the put call ratio. And let's take a look at what we got. Put call ratio. We are in extreme fear. This is the 5-day average, and I'll pull up a put call ratio chart as well on TradingView just to show you what I mean. So what do we see right here? Go back to June 16th, like the literal bottom so far of the market, down to like 362 on SPY. Put call ratio spikes up to 1.1, highest we have seen on this 5-day average chart the entirety of this year. Okay, and what do we see? From that point on, we had a substantial, very substantial run in the market. And we went from, what was that, SPY 362 to like 430 in the next 2 months. 2 months, okay? Pretty impressive move. Now, where are we? We hit up to 1.01 September 6th on this average. Let's go look at the charts. We're currently sitting at 1.02. It hit up to a high of 1.04 today at one point, but we're above right now, above where we were last week at the highs on the put call ratio. And let's pull up SPY's charts. September 6th was the day that we hit a relative. I'll go to the daily charts, easier to see. September 6th is the day that we hit that put call ratio peak. Okay, where is that, guys? I mean, you can't make it up. You can't. Okay. Now it's hindsight. So I don't know where the put call ratio is going to top out. Maybe it keeps going higher. If we do go lower, people are going to keep buying puts and it's going to probably go higher, right? I don't know. You're not going to know till hindsight, but look at this. What is this day right here? The day that we tested 390, dipped just below, got a lot of idiots. No, I'm not saying idiots, but people to buy puts. Okay. And then what do we do? Boop, boop, boop. 4 days later, green, 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 boom. And had a massive move from just under 390 to 410 plus. So if you're looking for bounces like that, timing those types of things, this put call ratio has been the literal like holy grail of indicators this past year. It's like a massive sentiment indicator because not only is it telling you sentiment, but it's telling you what people are acting on. Like people are acting on the negative sentiment and saying, hey, I'm buying puts. This is the data that's telling you, hey, they're actually buying puts. They're not just saying that they're bearish. They're buying puts, So that's one thing to look at. And of course, do we know if it's going to peak right here? Could it go for a new high and could it hit up to higher than those levels? Yeah, it could. It could. But what it tells me is that we're pretty close. My guess is that we're pretty close to something happening. And maybe it's Powell, maybe, I don't know. But again, like we've been talking about when it comes to Powell and his speech next week and the Fed and all that stuff. I mean, what the hell is he going to say that we don't already know? Yeah, seriously, really. And if anything, he's probably going to say something along the lines as maybe the economy is weaker. Maybe it's getting weaker, trending weaker, and not say that we're going to slow the rate hikes, but it could imply that's probably the only way, which means to me, that means that we could surprise on the positive side, at least for the stock market. Doesn't mean the economy is looking good. The economy is looking terrible. And they raised by 75. We're going to be, you're sending us, the 100 basis point hike. I think we've started to kind of get that off the table. It's now pretty much off the table. It's a 16% chance. Let me refresh. I don't think that's going to happen. You do a 100 basis point hike. I mean, all I would say is buy TLT and just close your account and walk away. You don't have to do anything. Because YTOT is a big deal. Of course, there's obviously risk there, but YTOT would be the play is because if they do a 100 basis point hike here, I mean, you're going to put us into a deeper and deeper recession that's going to take longer to get out of. And the longer it takes to get out of, the more rate cuts they're going to have to do at some point 6, 12, 18 months down the road. Doesn't matter right now, right? But it's down the road. So hence why I like the bond plays. So I'd be like going long bonds and short yields is the idea. And there's some recipes from last night, some fried rice that I made. It was pretty good on my on my Google, whatever. Good thing it wasn't anything bad. You guys would have seen like my last searches are like some nasty stuff. No, I don't know. No, we haven't got any of that. But let's see. I want to pull up the Atlanta Fed estimates. Let's see. The Atlanta Fed. Let's see what they got for their GDP. This is hilarious. This is because this is nuts and hilarious to me, because we've been raising rates, right? Quarter one this year was a surprise. GDP was worse than what the expectation was. Quarter two was also a negative reading, also worse than the expectations. Oh my gosh, I didn't see that we're going to be in a recession this fast. Well, no, you know what? The job market's actually pretty strong, so we're not in a recession. Well, guess what? Whoever the hell wants to say that, White House, this and that, we're going that way. That unemployment rate is going to start perking up next year. It's going to start looking pretty nasty, and we're headed that way, right? But whether you like it or not. And so if you don't want to say that we're in a recession now, we're going to be. We're going to be with these hikes, okay? Especially if they went with that 100 basis point hike, which I don't think is going to happen, but that's where we're going. All of a sudden, what the heck just happened? All of a sudden, the Atlanta Fed GDP estimate is coming down. It's just spiking straight down. We're looking at this as potentially going negative. This was, for whatever reason, everyone was like, oh yeah, quarter three is going to be great. You know, we're not going to have as at least GDP number wise. And now that progression is coming down, down, down again. So I wouldn't be surprised if we have another negative reading in quarter three. If we do, you know, here we go, right? In terms of, technically speaking, we're still in the recession, right? So we shall see when it comes down to it. All that great, terrible stuff at the end of the day is essentially what it is. It's not good, but we are going to see what the Fed decides to do, and then ultimately how this market and how the economy reacts to that into next year. It's not here's where a lot of people are going to are going to be wrong. I mean, we've all had our issues and playing whatever and trying to anticipate things. But in terms of the economy, here's where people are going to get it wrong. Where people are getting it wrong, I think, going forward, is that what's potentially coming next year, it might take time to see a lot of that stuff play out. And so this whole CPI being elevated, right, and all that stuff, it's probably going to take time for this to come, but we play out. But you get into next year, you're going to be talking about CPI crashing down and unemployment spiking up, and now all of a sudden it's like, are we in a recession? And it's going to be like, yeah, no shit, we're in a recession. Like, you know, it's going to slap you right in the face with that unemployment rate that's going to come in at some point next year. That's going to start perking up, especially if the CPI or the Fed is continuing to react off the CPI. And we had some notes from FedEx yesterday in the after hours that kind of freak people, saying that they're seeing some serious weakness in the economy. And FedEx and UPS are some good companies to watch, see what their guidance is, see what they're saying in terms of like an overall, you know, economy sentiment, you know, or where they're seeing the movements in the economy at least. So, I mean, it's not going to be good next year at this pace, especially if CPI stays even elevated for another couple months. It's really not going to be good. But I want to pull up that put call ratio. I got it saved now on my watch list. So here it is. PCC, put call ratio from CBOE, spiked up huge this morning. It's come down substantially today, but it's spiked up massively this morning. Not surprised. Everybody likes to kind of not panic, but FOMO into puts, you know, when we have gap downs, and it's a very common thing. But if you broaden this out, what are you going to see? That today's high on the put, this is like, you know, these are looking at individual days. The other chart we looked at is a 5-day average to kind of blend that out, which I think is pretty useful, and you know, you get a better blend on it. But what is this? Like, what the heck just happened here? Guys, this is the highest put call ratio level we have seen since, go back. Was it like 1.6? Since April 2nd of 2020. Post-pandemic or crash, pandemic, as we're coming out of the pandemic crash. So, I mean, yeah, I can't debate the way that I like to look at things. I can't look at that and say, oh, we're going to go down so much lower. The risk reward, again, is skewed to the upside, in my opinion, right now in the short term. Again, we need a reset. You get the put call ratio coming down, you get a nice reset, a nice push to the upside, and we can reconsider that, right? But that's just what we're looking at now. So that's why at least I feel pretty confident in being bullish going into next week, and, you know, maybe a little bit beyond. We'll see what the market wants to do, and we'll go from there. We shall see. Micron, USO calls, chopping along, but I think good. Yeah, we'll see. Where's MU at? What is it down? Only down 0.5% today, so it's not as bad. So it's holding those lows, right? It's holding those lows that we talked about last time. So if those lows hold, you can have a nice snapback up to that, you know, trend line, or maybe even that 50 SMA, right? On MU, on Micron, on USO, what's oil doing? Oil is, today it's up barely. Natural gas is getting killed today. But oil is kind of still in that range, for now. If anything, am I super bullish on it? Like, not really. But if it got a push to the upside, that's when maybe I would be interested in taking a downside play. But it has to get a bigger push up the upside, where I'm not really interested in it. Gold, yeah, gold did break the trend line. So we're looking at gold right past couple of weeks, kind of here and there, and it cracked right down. Now, okay, just because it cracks down below, hits some stops, people panic, right? Gold breaks down below lows we haven't seen since you had to go back to 2020. Be careful though, because it could easily, and then as you're seeing it's a bounce back day to day, it could snap right back up into here, and if it can regain this area and start to hold above, right, it could easily kind of pull that last pullback before a move up. So it's something to think about. Obviously, I'm not currently in any gold plays, but something to keep in mind on how gold is looking. Silver was looking a little wonkier. Silver's, had that kind of pull below the lows and then it's bounced back up. So I wouldn't be surprised if gold pulls something similar to that. And it seems like silver might be leading the way in terms of it's a little bit ahead of gold, right, in terms of the chart. So we'll see if that's the case, if it can regain this, looks like 1675, which it's sitting at like right now. It's like sitting right that spot on gold. Kyle's buying some JEPI, J-E-P-I. Honestly, a solid play, right? If you look at this, we look at the chart too, I think. We looked at it like last time. Maybe it was last time, or I forget when exactly. But thing is, like, in terms of the range it's seen, it's pretty nice. It hasn't been as volatile, right? Obviously, as certain stocks, and you're gonna get paid a fat dividend. So you are looking, 10% dividend yield on this thing. And it's not a very volatile name. Obviously, you could see some appreciation here if the market was to turn up, but 10% yield, man, is not too shabby, right? Every 56-cent dividend per dividend So get as many shares as possible, and you're cashing that dividend nicely cash flowing, maybe selling covered calls. That's a nice cash flow machine almost, right? Let's go to Qs. Q. So here's where I'm kind of, well, not kind of, but if we broaden it out, I'm looking at the 5-year. We're looking at the 1 year. We did break below the lows of like last week, technically speaking, on QQQ. If you go to SPY, we also broke below those lows on both of those. Where we actually have got some relative strength is IWM. It did break below briefly today, the lows of last week, but it's kind of holding up. It's trying to hold a little bit around this 178 area. I kind of have this box that I drew in like a while ago, and I do like it if it stays and holds this area. So what I decided to do, especially playing off the put call ratio, which has been a gold mine this year, playing off of that I bought some IWM exposure. So I bought the 3X ETF because it's a little bit cheaper in the options. Similar situation. I bought the essentially IWM calls out to January. So, plenty of time on them. But as long as we hold this zone, this is my risk, right? So I want to see it hold like 175. If that breaks next week, I'll just get out of those because we could come down, decently lower. Dare I say new lows? Who knows? But that's the idea. If this area holds, put call ratio stays elevated, I do like it. And this thing popped up. I think it's TNA is the ticker on the 3X small cap ETF. This thing popped to 54 roughly back in August. So I bought 50 strikes. So they're cheaper, but I bought, January of 2023. So there's, a lot of time on those, I guess. But yeah, I'm looking at like 50 strike is up here. Like, is that possible? Well, I'm looking at the top of the range of this big move right here. Not saying we have to hit that high, but I like that kind of strike as it's a reasonable strike in my opinion. So that's what I'm playing, at least off of that. So if we get a bounce and it pops up, up into here, 50 SMA, get a nice little bounce on IWM into next week or whatever, off this sentiment, then I would just take some of those off. And that's it. And then just kind of rinse and repeat, ideally, until we get a bigger move or a directional move, right, that sustains itself. Pretty bad day for XBI. Yeah, XBI today, it's interesting because IWM is down 2%. Qs aren't down as bad. It's kind of, notable weakness there. XBI is down like 4%. So that's getting hit pretty hard. ARK is down 5%. Amazon's down 2%. Apple's not as bad. Amazon's down a decent bit. So yeah, they're getting hit. It's still holding last week's lows, right? This is last week's lows? Yeah. No, it's still holding last week's lows at like 81 on XBI. It's kind of wonky. This chart's kind of wonky. I guess these trend lines, it's not really, helpful here, because it's like it broke the trend line, then it got rejected, and then it's whatever. It's doing whatever it's doing. But unless it falls below 81, we still have it. I like it down into this area. If it falls into the upper 70s, is a nice spot. But if it holds that low too, it's it's still not terrible. I mean, this chart's held up a ton better than a lot of other stuff. So I look at this chart, I say to myself, as much as like it's been kind of choppy the past like 2 weeks, 3 weeks, it's not too bad when you broaden the time scales out. It's a solid push away from this $100 target that we had. Really, it's not that far off. It's like I can have a push of 2 to 3 weeks and it's there, based on how this thing can move. So we shall see. And it's had some pretty explosive moves. It had a move from 78 in a matter of like a week. It was up around 95 from 78. So that one surprised me for sure. But isn't the put call ratio seen in the skew? What do you mean the skew? I was looking too at some other stuff from CBOE yesterday, even this morning, and there were some crazy numbers. So we can look it up. CBOE put call ratio. It's kind of a pain. It's not as easy to view because you kind of got to go separate it day by day, right? But if I look at this is kind of some cool stuff to look at too. So you can kind of look at and get a read on a couple different things. So total put call ratio for is 1.07. And again, on average, from what I have looked up now, they can all be calculated slightly different depending upon where you're looking or whatever. Like there could be a 5-day average that we're looking over on the Fear and Greed Index. You could look at the individual put call ratio from a given day that we saw on TradingView. On average, from what I have looked up, you'll get roughly a 0.7 is the average. Why is it not 1? Because generally speaking, the market has a pretty decent skew to the call side. People buying long-term leaps, people buying, in the money options, people buying just generally, people are more bullish than bearish. So you'll see that put call ratio is on average around 0.7. It's like neutral. Index put call ratio is substantially skewed more to the put side. ETF or exchange traded products put call ratio pretty high, over 1. Equity put call ratio is kind of close to average at 0.73. The volatility, the VIX put call ratio, here's what's kind of crazy to me, 0.38. So again, VIX calls, that's telling you that we got a massive, massive skew to people buying VIX calls. That's crazy. It's a lot of people buying VIX calls versus puts. A lot. So if you were looking at a play to fade the crowd, to fade or to play the backside of where everyone's at, I mean, everyone's at this. Everyone's over here on the VIX playing calls. Now, is it the best? Let's see. Is it even worth it? Like, is it even worthwhile if you go and play the VIX? I don't know. Let's see. Like, can you pick up something out to, like, I don't know, go out to October 20 something. Let's go to October 19th VIX. Let's go to October 19th on the VIX and see if, like, is there put supply? I mean, yeah, you can play 30 puts that are going to go for 450. It's, trading right now. No one's buying these, no one's buying these. And it's not like you're going to have like a 10x, it's not going to be like a 10x play, right? But it's just in terms of risk reward, it could be a decent idea. 30 puts on this, they're going for 460 right now, and VIX is currently at 26. So you're like $1 drop from being essentially right at the intrinsic value. I mean, it's not that bad. Not as long as you fall off, right? If you start pushing up, you're going to get hit. So the VIX puts, man, might not be a terrible idea as we take a step back too. Yeah, VIX try to push over these highs, and a lot of wicks on the VIX are up here around this $28 area, $27.50 to $28. A lot of wicks up there. So, where could the VIX fall in about a month's time? Oh, it could fall a lot in about a month's time, but let's just think, if you think 50 SMA back down to lows of just last week, you could be talking about the VIX down around 23 pretty easily. So it's a couple dollar drop. Those calls could do, like 25, 50%, right? So something like that. I think that's, if you're looking for a play to fade the crowd, right? That's not a bad idea. So, there's that. I was looking at some of this and I was pretty surprised by some of the numbers. And of course, the way you go back in time and you can sort through here, if you want to kind of get a refresher as to where things were, in August, if you go back to well, look at these numbers now, right, of how high they were and how low the VIX put call ratio was. Let's go to August 15th, about a month back. August 15th happened to be the day before the peak of the recent rally. Put call ratio 0.9. So, still relatively high compared to average, but much lower than what it is now. Index put call ratio was lower than what it is now. ETF or exchange traded products 1.2. Equity put calls was way lower. Below 0.6. The VIX put call ratio was actually closer to like that 0.75 area. So the VIX put call ratio was way higher. It means a lot more puts are being bought on the VIX than now, relative, a lot less calls than now on the VIX. So you can kind of see just how that sentiment, just how that emotion plays, that when we're rallying, everyone's trying buying calls, feeling good, and buying VIX puts. If that's, I don't know, people like love playing that, but some people do. And now you see it's like kind of the flip side. Everyone's playing their way, right? So it's interesting to look at some of that data from time to time. The cam girls. Jeez. Consumer sentiment came in this morning, I believe, just under kind of close to expectations. Let me see. University of Michigan consumer sentiment came in. This is today. 59.5 was the number, the reading, and I think the expectation was 60. So that it came in just under the expectations. It was like not that far off. Let's see if we can get the chart. What's this chart going to tell us? Anything interesting? Okay, so here we go. Inflation uncertainty as estimated by the range or the expectations. So we're seeing a massive, I guess that's popped up a ton. This is like a huge chart, but it's obviously spiked massively this year, but that's not really that helpful. That chart isn't that helpful. That's their featured chart, I guess. But there's more out there. You can look at more stuff. Let's see. Index of consumer sentiment. Let's look at the last 10 years. You can kind of get a feel for this. Let's see. It's bounced off of where like the worst. It was pretty bad, a few months back, past couple months. It's bouncing a bit, but you can see it's like the worst we've seen in 10 years. But this is also not taking into account 2008. So if we go back to 2008, last 50 years, I mean, you got down to pretty nasty. We broke below 2008 levels of consumer sentiment, and we broke down, I think, below or very close to. I think we just broke just below this around 1980. So this is like right around 1980. Broke below that. So like the worst we've seen in terms of the consumer sentiment in 50 years. This is where I think it's kind of nuts because I'm very surprised at kind of the moves that we've been seeing, given some stuff like this. I mean, people are like, I think a lot of people kind of see it coming, right? That's the difference, I guess. A lot of people in a way, like they're like, hey, this sucks. Like it's not going to be good. And we kind of are here. We kind of are ready for it. Hence the put call ratios, hence sentiment, hence, why everyone's so bearish and whatever, which is kind of interesting. I guess, you got to go back to those times and really gauge things and see how it really was. I don't know if it was the same, I guess, depending upon, your experience and how long you've been watching things, you have maybe a better feel on that, but we'll see how it shakes out, right? Stuff like TLT. I mean, the more I think about TLT, the more I just I haven't gotten, stupid. I haven't gotten massively heavy or no. I mean, it's in the Robinhood, in the Robinhood portfolio, I got almost, this portfolio is at 10K roughly. It's like 9.7. Yeah, it's 9.7. I got about 175 shares at around a $10 average. I want to get 200 shares, maybe 250 max if I sell something else or, I get taken out on something else, maybe, that's the idea. On TMF, that's leveraged. And then the TLT positions I have in the Webull, I have what do I have on those? Like around $2,000, on those. It's nothing crazy. They're obviously both leveraged, so I'm not going to put they're not worth putting a massive amount of the portfolio in because they already have leverage. If we get the move, they're going to do fine. But the more I think about that, the more I just say, you know what, man, that's just like a TLT and buy TLT and close the computer If you are thinking about this, obviously you got to pay attention to what happens macro wise. You got to kind of pay attention to inflation. You got to kind of pay attention to the Fed, right? But realistically, if you're like, hey, Fed's sending us into a recession, this is not going to be good. This is going to be horrible next year and beyond. I mean, the TLT play is just like kind of that almost a no-brainer here. And there's risks to it, obviously, of inflation being higher in the short term and the Fed really having to kind of crank rates. And again, if they do that, we're talking about some unprecedented, rate hikes that we've never seen in terms of the aggressiveness and the nature of how fast we've gone from like zero to where we are now in rates. It's only been however many months. We don't know what the heck is going to happen. So yeah, you're betting on a soft landing. If you think this is not a good play, you're betting on a soft landing. You're betting on rates staying higher in the short term and the Fed having to be more aggressive and that not actually impacting the economy that bad into next year and beyond, right? That's possible. It's very possible. But I mean, it seems like just from what we're seeing company wise, little by little, right? We're seeing a lot of nasty signs as to what's going to happen for next year. Go with TQQQ, then the weekend. I don't think that's a bad idea. We're closing. Let's see where SPY's at. We're not closing like super, super strong. I'll go to IWM first. Not super, super strong. We're bouncing off the lows. SPY, or let's go to Qs. The Qs are at, a decent bounce off the lows. It's not bad. We could technically on SPY, we have a little bit more room to come down, like another $5 or so from today's lows, is realistically where I think we can come down. But in my view, right, I think we can probably get back up to 400. So if you wanted to take that risk reward and say, hey, if I'm going to risk it down to around 378, right, whatever, risk $5 to make 15, it's like a 3-to-1. So it's a pretty good risk reward if you're looking for that move back up, especially with how high that put call ratio is pushed up to. So, and it's not the crowded trade. Let me tell you that it's not the crowded trade. You're not going to find everybody everybody out there on social media jumping at the bit to buy, go long right now. And this week definitely feels kind of like one of those weeks. And I'll talk about more of this tomorrow too in that update because, I'm not essentially not a bitch. I'm not going to not show you guys, the portfolios, red weeks, green weeks. We showed all. The reason why we did put a 10K roughly or a little more than 10K is what I put in. So, okay, we're down, right, technically in the Robinhood. I put a lot of this money in. I put money in here is really to minimize the crazy swings. Now, we can have a crazy week like we had, but because I'm only playing shares and I'm offsetting with selling some covered calls and selling puts, right, I'm not going to have the massive fluctuations that options will have in the Webull portfolio. So we kind of can be, to some degree, to the way I view it now, is I can kind of be a little bit more aggressive almost in there because I kind of have this as a backstop. I was like, okay, well, I still got, a chunk that's sitting here that will be fine in terms of, the volatility, right? But yeah, I feel like I definitely did not do a good job of how I handled, my own, positions this past week because I had opportunities. I had an SPXL. I still sold it for green, right? No, not going to complain. It was a green trade no matter what from when I bought it back around that 390 on SPY like last week. But I had the opportunity to sell that thing for like almost a 200% gain, and I didn't take it prior to CPI, and I held it into CPI, and then I gave back, a fat chunk of that, and I only sold it for like a 20% gain at the end of the day on that last contract. It's like, oh, it kind of sucks. There was that. I bought some things maybe a little premature and whatever. It is what it is, right? In the grand scheme, in 6 months, we're going to see if it was really going to matter, but kind of pissed at myself. But then again, right, that's the whole point of like why everyone says, oh, you can't time the market. It's so difficult to time the market in the short term, right? Yeah. So you kind of have to take, if you're going to try to do that, you have to understand that it's going to come with that risk, or it's going to come with, the short-term downside. If you're wrong, at least in the short term for like 5 days, 6 days, a week, 2 weeks, 3 weeks, a month, right? It could hurt. But yep, that's kind of how I'm feeling about this week. It's kind of, it is what it is. Now, did I anticipate this CPI sell-off? No, I definitely did not. I wasn't sitting there saying that, oh my God, I think we must go to 430 again. No, like I totally could have seen a sell-off and it makes sense. I just didn't anticipate necessarily the sell-off being as big as this was. I thought maybe we'd be talking about SPY pushing down to 400 because it had a pretty nice solid move up, right? We had a nice cushion. I was thinking that maybe 400, but then again, right, this move that we got like Friday and Monday of last, or even, Thursday, Friday, Monday, last week going into this week was just all that kind of slight, cushion that we just gave immediately right back. I think a lot of that was algo selling and whatever, but it gave it all back quickly on that CPI. But it is what it is, right? Who would have thought we're going to see a 5.5% red day on the NASDAQ? I mean, I wouldn't have bet on that. Maybe 3%, 4%, maybe I wouldn't have thought 5.5 in one day, but that's the stock market, right? DLNG. Dingling, so it sounds like to me. DLNG, right? Let's take a look. DLNG. I mean, chart-wise, it's got a nice recovery since the pandemic, or actually not, since 2019. It's a nice recovery. Big picture. You got to look at like on months. You're talking months. This is not a bad looking chart. You kind of have that head and shoulders look right here, where you have like these highs. So yeah, maybe some solid resistance up here towards 4 to 450. But you're coming down to support, you kind of got some nice higher lows building right here. Like if that trend continues over the coming months, this is a decent dip buy. Risk down to like, $2.90 or $3. It's not bad. Pretty good volume, support right here around $3 as well. A lot of volume is traded around that area. Cover call portfolio has a lot more heavy. Oh yeah, no, the cover call portfolio is still high beta, right? For sure, but it's not as high, I guess, beta as the option positions in the Webull that I have. So it's not as rocky, but the Webull is pretty rocky this week. You'll see tomorrow. Today's also quad witching too, so everyone that whole thing, nothing like, not downplaying that, but this whole quad witching stuff, man, is just like people like almost jerked us off to the point where it's like, oh my god, it's the end of the world. Like, please relax. Like, it's probably not going to be that insane. We got 20 minutes to go. We're gonna see what happens, but I don't think it's gonna be like, oh my god, SPY goes to 400 and then it goes to 380. Like it's couple bucks, is the head of moves we're going to see. Looking back this week, also, I guess the miss that I had was in the cover call portfolio, not taking advantage of Monday. And what I mean by that is I only took and sold 3 covered calls this week. What I mean by that is like Monday I could have used the green day to sell some more covered calls. My concern, the reason why I did not, was because my concern was that what if CPI was positive and these stocks that were strong last week just rip up. I don't want to get blown out and taken out on all these stocks. So I was kind of cautious upon that approach. But that was, I guess, looking back, I could have hedged a little bit better maybe by doing some of that. Because then worst case scenario, right, you can always just roll them. Worst case scenario, I can just roll them and keep on rolling them and keep on rolling them and doing that, playing that game, like realistically. So not the end of the world, but, didn't cash flow a ton this week because of that. Next week, different story, but also after a pretty red week, if we start red next week, there's not going to be too much to do. I'm not really interested in selling these things when we're red. If we start going green, then these calls start having some life, and it starts to make a little more sense, and these far out the monies actually have some buyers, and so I could sell into some of those buyers on those far out the money calls, and cash flow a few bucks. I'm really looking forward to doing that on TMF because getting over 100 shares, now I could be a little bit more like lenient upon where I take where I sell a cover call. TMF has been getting killed again. It's TLT's 3x ETF. So obviously this is getting killed. But if I went out to sell a covered call for next month, for October 21st, let's just look at what you're talking premium wise on some of these. You can go to 12 and get $10, 13 and get 5. It's not much. But you have a good day or two, and then you could be talking about, these kind of doubling up, right? These 12s being worth, 20, these 13s being worth 10, and these 14s being worth 10, something like that. And then I could be, more interested in selling that. And I wouldn't be, so afraid of doing that closer to the money, because I know that if I lose 100 shares, if 100 shares gets taken from me, then I still got the 75 to back me up. Ideally, I want to get 200 of those, 200 shares, but we'll see if we get that. No guarantees. Maybe we not dump, but maybe we get rid of like something that we're up a lot. Like if like, oh yeah, perfect world, Fisker, right? Perfect world, Fisker going up into there and into the let's say Fisker runs, like 10, 20, 30% on the individual, on the underlying stock. If that occurs going into Fisker's production that they got going on for the Fisker Ocean, if that happens, great. I'm at, like I've said, I'm out of Fisker. I don't want Fisker anymore. I don't care whether it goes to 30, 40. I don't care. I bought at 9, so I'm in at 9. Whatever. And I've been selling covered calls, so I'm essentially flat on my position, but I'm actually up on the overall after selling the calls. If Fisker goes 12, 13, 14, and 15, I'll be selling those calls, and I'm hoping to get taken out. That's the deal. So we'll see. We will see. One of those events turning out to nothing burgers. Yeah, that's how quad witching, to me, it feels like that. I don't know, but that's how it feels like to me. August, I've been doing well just playing Teak. Yeah. My strategy is buy and sell it for 100% profit. I'm 127 trades from $1 million. No, but you know what? To be honest, and I go back and forth all the time, but I really think about the simplicity approach of something like that. And when you think about it, like I said, this is one of those things I think is one of my biggest, I guess, downfalls is always having that feel that like I gotta be in. Like even though like I might have longs, if I think we're going down, I gotta have a short, right? But then you're kind of confusing like your whole portfolio, your whole situation. So it's like that can kind of confuse you and mentally throw you off. So there is a lot of benefits of keeping it simple, playing one stock, one ETF, this or that. So it gets me thinking, right? Like, it really gets me thinking about the TLT and all that stuff into next year. It really does. Because if I think about it from a simplistic approach, stocks aside, like I think there's a window. I really do think that there is a window for stocks to do well if we didn't go into like a really bad recession next year. Like obviously if we didn't go into one, then these dips will be the dips that will be, looked at as like the gold mine, into next year in 2024 as we recover and as the Fed drops rates eventually. If they can soft land this ship, which I don't know if that's going to happen, but I know you don't want to get ahead of it and saying they're not going to do it because no one knows necessarily that's what's going to happen. It's all going to play out. The writing's on the wall, I think, for them potentially to have a very nasty hard landing if this ends up being an over tightening, right? If it is, it's going to be pretty bad. So writing's on the wall, but there still could be a window in there where CPI is coming down. The market looks out and says Fed's going to slow down rate hikes X months out, right? Bond market will be ahead of that. Stock market will be like, okay, cool. And so there's that window where like stocks can do well. And then wait a second, CPI is actually getting really bad, or it's coming down really bad. It's continuing to come down. Now all of a sudden we have the risk of deflation and everyone starts freaking out about that. And then companies' earnings are horrible. Companies are like, I'm not saying going, all of them, big companies going under, but companies are cutting, unemployment rates spiking up. That's not going to happen. Like you're not going to go from right now to that, there will be months in between of us getting to that point if it happens. So that's why I'm saying that there will be a sliver of hope for stocks to do pretty well for a few months at a minimum. Obviously, if we never get to that crazy high unemployment, we never get to like a terrible, terrible, deep, dark recession that potentially could happen if we over tighten. If it never happens, then stocks should be fine, right? Bigger picture, years out. But if we go there, then, in a year from now, it very well could be the same situation that we have a window and then we're back down to red, to a lot more red, right? Potentially, and potentially even new lows. Let's just say on the S&P, from here, like maybe we kind of pull something like this where it does whatever it wants to do and it kind of curls up and it has a pushes up and does whatever. And then from there, we kind of head back down to new lows into 2023 and 2024, maybe. I don't know, but that's the potential is there for that to happen realistically. So we shall see. But from macro perspective, that's what I'm just focusing on macro wise. And it's a slow process. It's not going to happen tomorrow because Fed raises rates today doesn't mean the economy's doomed tomorrow. And just because the Fed raises rates, as we've seen, doesn't mean CPI comes down tomorrow. So IGLB could be another good play. You know what's funny too? We've been seeing, like we were talking about Grill a couple months back, and I got out of Grill. Oh yeah, that's another one too. It's another bond ETF. Yeah, this could be a good play too. And there's a lot of ways. It's a 10-year investment grade corporate bond ETF. There's a lot of ways to play the bond, to play bonds and play yields and play the reversal we could potentially see. So there is. But what was I saying? I forgot what I was saying now. Whatever. Place a trade and go do something else. Read a book, go shopping, etc. Yeah, that's how you do it. You set your spots, you set your targets, you set your stops, and that's it. And that's the thing that I do like, and maybe that's what I end up doing in the small count eventually, right? Because play the 3x IWM ETFs or whatever instead of options, because the decay, there's some decay on the 3x ETFs, but it's not as bad as you're going to see on short-term options, right? So maybe there's something to be, said for that as well, of playing ETFs or, playing stuff, especially because then if you have margin enabled, it's as scary as that sounds, it's not that bad. Again, if you're playing, like if I'm playing, SPY or IWM, and I want to just play the stock, I don't want to worry about options, have decay this, decay that. Of course, you can go to futures and trade that. But if I want to just play the stock and shares, so what if I go into margin? As long as I respect my risk, like I'm not risking my portfolio, and SPY's not going to zero in one day. You know what I mean? So it's not like it's that dangerous, realistically. If you're depending upon what you play to play on margin, for day trades and whatever, even swings, it's not that bad, realistically. It depends obviously on what you're in, but it's not the end of the world. Everyone a lot of people are like, oh my God, stay away from margin, don't touch it. I mean, if you have proven to yourself that you know how to handle it, yes. If you're the one that's gonna start being like, okay, I'm down today, let's double down, and you start throwing money in, margin on 3x ETFs, and like you're just buying the dip or shorting a pop, and you keep shorting into a spike, or you keep buying into a dip, and it just keeps on dipping. Like if you've done that in the past, and maybe that's not for you, or maybe you should have stricter rules in place, right, for yourself. But it's not that. It's not the end of the world. Oh yeah, grill. Mm-hmm. So we've been seeing right now that a lot of stocks. This is, I don't have any cash to. Let me tell you, when it comes to cash, like I'm kind of getting to this point of like you got to be kidding me. With NSPR, with PPSI and POLA, they have just been sitting ducks for I feel like months. I mean, NSPR, yes, but PPSI and POLA, it's just been a pain in my ass. But I know what will happen will be I dump them at support. The day after I dump them, spike. I almost can guarantee that's going to happen, but no, realistically, Grill's chart, I like a lot. And they got the extension to regain compliance with the NASDAQ. But what have we been seeing? I'm not sure how many people have been paying attention to small cap land. I know it hasn't been the most exciting, space. It's had its ups and downs for sure. There's been some good runners. There's also been some quiet periods. But some of these reverse stock split stock, like these names that have had recent reverse stock split or announced a reverse stock split, have been running hard. So if I'm Grill, right? If I'm just thinking about pumping my stock, I'm thinking like maybe we should do a reverse stock split or vote on a reverse stock split soon. That could be enough juice to kind of get this going. I mean, I don't know, but chart wise, I like it. They've got cash from last earnings I saw. And the threat of the reverse stock split is actually not as bad as it maybe seemed, 6 to 12 months ago. It's actually not a bad thing because these stocks that are getting reverse stock splits are running super, super hard. So that's a thought on Grill. It might not be definitely not a terrible play here, especially as it holds on this 40 cent level. 50 SMA, I mean, you're one PR away, you're 1 day away from Grill at 80 cents, no problem. So, or 50 plus, 60 cents, something like that, I think is a lot more realistic, but it can do more. It could go for more than people realize or you think. Don't be surprised. All right, let's see what IWM. Look at this candle on IWM. It's pushing up. Look at IWM though right here. Look at this. You want to talk about dipping down, right? Cracking just below that support from last week, dipping down to 177, catching some stop losses, and then bouncing right back up. I mean, that's exactly what you're getting right now. It's a pretty bullish candle, especially if we can close up here. If we close above 179, that'd be sick on IWM. So, like I said, I'll talk about my IWM in the TNA position in this one sec. Appreciate it, August. I appreciate it. I really appreciate it. Really, guys, the only thing I don't ask for any of that stuff, but I appreciate it. The only thing I ask for is a thumbs up, which I don't ask for enough, but that really helps out a ton more with the streams. So, that's been one of my biggest downfalls of I feel like is that I don't self-promote in a sense very well. I mean, some people are like always yelling, "Oh, subscribe, do that." I'm just like, if you want to, sure, or I don't even say anything. You know, the way I kind of see it is like if you're gonna subscribe, you know, you're not gonna subscribe from me saying subscribe. You're gonna subscribe because you actually want to subscribe. You know. Also, something to think about. This weekend is going to be a pretty interesting weekend for myself. We shall see, but it's very possible that I'd start cranking into or looking deeper into a potential Discord. It will be 100% free. It will be 100% free. There will be nothing that is additionally like, oh, pay to no, free. But we potentially will do one, just so that we can have some more after hours, you know, chats or, you know, stuff we can kind of get going on in there. I think it could be useful. So we shall see. This stuff right here, I'm not sure if you guys can see this. This is a package of pills that I finally have gotten from my doctor. So I have had this shoulder. For some of you, you know, I've had this shoulder pain in my neck, shoulder, for about 3 years now. 3 years. Okay, it's not like I can't work out. I still work out like every day, but it's like this really weird pain that actually kind of hurts in the morning. It hurts when I'm sitting still for a while, and then I get up and start moving. But it gets better as I kind of move and I kind of, you know, open things up and I stretch, or I like, you know, working out, I'm kind of get some blood flowing. We have kind of come to the conclusion or the thought that it's very possible it's a pinched nerve. So 3 years of doing MRIs, going to PT for like 2 years, all this stuff. And it very well be that this small package of pills that will take me 6 days to complete will solve that problem in a 6-day span after dealing with it for 3 years. So we'll see how that goes. Hopefully that will be helpful, because it's been a real pain to deal with that pain. But, you know, hopefully that'll be getting better. But yeah, doctors and stuff. I'm always someone who like hates going to the doctor and having to deal with all that stuff and then like going through this and that just to get to like this, and then for them to tell you that it's blah 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 and you can't do anything about it or you have to do this. You know, I kind of want that. I kind of try to do my best to handle it myself if I can. But I feel like I've been getting bombarded with doctors lately. I've been dentist. He got the orthopedic doctor for the shoulder. I had an MRI done, like nothing on the MRI again. But it's been kind of interesting. Better late than never. Yeah. It hasn't been like a huge nuisance. It's been a nuisance. It hasn't been a huge limiting factor in my life. It's just been a nuisance, is what it is. But yeah, IWM ripping up. So what I decided to do, so like I mentioned before, I bought TNA calls. I bought TNA. It's a 3x bull ETF on IWM. I bought TNA, and I kind of threw I threw the rest of the cash in the Webull in this. Okay, not something I would recommend, but I threw the rest of the cash in the Webull into this play because it's the 3x on IWM. So I'll look at IWM. I like it in here. I like it a lot in this zone, from like 178 down to 175. And it seems like so far we're holding this 175. We're looking pretty good. I like it in this zone, and I really like it for a potential move up to, maybe, IWM pushing up, $5-10 into next week or something on a squeeze as sentiment's gotten pretty nasty. That's what I'm looking for. So we're going to see how that plays out and if we can get something good and if we get some nice upside. But I threw some of those on, and we're going to run. I bought the January calls in them. So that's why I've been watching IWM. And I've been watching IWM, and it's been holding up decent relative to SPY, not as bad. Today it's worse than SPY, but it's bigger picture, not down as low. cervical radiculopathy. I don't know. I can't say some of these words like very fast. No, I've gone through like a ton of stuff and we've checked out like honestly like every possibility in the shoulder, AC joint, like all these different things, the speculation that, the doctors have had. And it's like, I'm like, I don't know, man. All I know is that I wake up in the morning and like this area, like just hurts. Like it's not like a spot, an individual spot. It's just like in general. Right. And I've had these weird, like, and I think it is, I really do think the pinched nerve makes sense. I don't know much about pinched nerves. Right. But I have gotten the past couple of years, these weird, like extremely like, I don't want to say sharp pains, but these pains like in my like neck almost. And like these pains that like, I have to kind of like twitch almost like to go like this just to like minimize the pain. And then eventually it subsides. It's super weird stuff, but like, I feel like that might have something to do with it as well. Also super tight, like this side shoulder is super tight. Maybe that's because I sleep a certain way, but I think we'll see how this next 6 days goes. We'll see if we can, if we can be looking good. Kratom works great for my pain, but I know some have issues with that. I've never tried it. Micron is spiking. Let's take a look. Yeah, we got a nice little push into the close here. Yeah, Micron, that's a nice push there. It went green. Let's check in on the, we're about to finish the day off. SPY is trying to push up. They're still all red. It's not like SPY's going to go green right now. Everything is still red, but SPY right now is just trying to break over the high of the day. Yeah, it's getting some rejections right here up at the high of the day. Over this 386 is what you're looking for a potential little push, maybe $1 push into the next few, well, it's got 3 minutes to go. I'm not sure how much of a move you're going to get in 3 minutes, but, let's see if it can give it a little bit more juice. Again, this is the monthly expiration for a lot of options. So we got a lot of options expiring right now. And this is kind of one of those days too, where it's a perfect day where, especially if you bought puts at the open, unless you quickly sold them, if you bought puts for today at the open, there's a good chance that you're getting killed, right? We've been kind of pushing back on up. So the only winners today are those who bought calls like down towards these lows or like, relative lows so far. And then depending on what calls you got, if you bought same days or you bought Monday expirations, you could be bleeding out pretty bad on time decay if you bought out the monies and whatever. So it's never as easy as it seems, right? We're trying to push here. We're trying to push high of the day. They're like 10 cents and we hit a high of the day on SPY. So next week, we're resetting with around like $275 to $300 in the small count challenge. We're resetting around there and we're going to give it a shot playing IWM, like at the monies or in the money contracts. Like two plus days till expiration. We're going to play some of that next week and we're going to see how it goes. I'm excited because I think I could do a decent job in terms of managing that risk a little bit better. I've just found it pretty hard to manage the risk when you're playing far out the money contracts that have, tons of time decay, got volatility decay, and there I get a lot of ways to lose, right? So speculators increase net long US dollar bets to $17.24 billion in latest week. That's pretty impressive stuff. So people are betting, and this is again, would I want to bet long on would I want to be going heavy long on the US dollar right now up towards highs? At least give me a pullback, you know what I mean? At least. But you're asking for it. You're asking to get wiped. But then again, depending on how you're playing this if you're playing with leverage or if you're just playing, like it's not as risky as certain stuff, I guess. But tells you that a lot of people are still betting on the dollar to the long side. PPR, stem cell injections to clean it up, had many bodybuilding, sailing, certain injuries over the years. Works like spy butts. Yeah, we'll see what the we'll see what happens. I'll go through these pills and That's what I was prescribed. He told me to take them, and he's like, okay, in about a month, come back if you still got pain, and we'll reassess and we'll see what to do next. So we'll see. It's not like it's the end of the world. I'm functioning fine. Like, it's not like my gosh, everything sucks. I can't, move. Like, I'm fine, but it's just annoying. That's all it really is. So, yep. Outside of that, let me see. So we're talking about next week, into next week. Yes. Oh yes. I will mention this more tomorrow. Someone mentioned on Twitter to explain what I meant by hurricane stuff going on. Let's talk about this briefly before we wrap things up for today. Because it's important for PPSI, POLA, those positions that I have, or just in general. I mean, for those who even care to, because I am a pretty substantial weather nerd. So we got a storm, right? We have tropical storm, I believe it's called Fiona now. I think it's at the tropical storm status. It's just east of Puerto Rico, pretty much, or on the U.S. Virgin Islands. That's going to come through Puerto Rico, give them a ton of rain. It's going to come through the Dominican Republic, give them a ton of rain. Haiti, a little bit, but more in the Dominican Republic, get a ton of rain. Fun fact, my sister got a parasite in the Dominican Republic 5 years ago. That's just I don't know why that crossed my mind, but it's a disgusting fun fact. So if you ever find yourself there and you have, stomach problems or gastrointestinal problems years later, maybe you got to think about getting yourself checked for a parasite. But then you got a storm essentially coming out east of the Bahamas, and just barreling down in between the east coast of the U.S. and Bermuda. So it looks like it's a near miss on Bermuda, and it's also pretty close to the U.S. This is out about a week. So this is out to next Friday. Forecast models go back and forth. This is the first substantial, like really big storm. It looks like this could be a beast. I don't know how big, but it's the first substantial one of the year in the Atlantic that we could be dealing with next week. So we'll see. But this is something to keep an eye on. So, it depends on how this ends up playing out forecast track wise, but it looks like a miss for now. If that changes over the weekend, you could be waking up to some threatening news upon, let's say, the Gulf all the way through the East Coast of the U.S. into next week in terms of potential hurricane, whatever. Outside of that, forecast models don't have too much going on. So the PPSI, the POLA plays, I mean, they're kind of going to get a possible surge on this, especially if it was a threatened land. Now, it's kind of one of those situations where it's like, it's unfortunate if it hits land, but like the stocks will probably go up. So it is what it is. Let me just check a couple other things here really quick. A couple other models just to see what other models have. There's U.S. models, Canadian models. This Canadian model that they have, this Canadian model is a pretty close call. It's like really close to the Carolinas. So that's a concern, and we'll have to see, but that's a close call there. A lot could change over the weekend for sure. So we'll have to see, but let's check out the Europeans got a pretty good accuracy. Let's check out their model. Let's see what they're looking at. That's a miss out to sea. So it looks like the higher probability is going to be a miss, but if you wake up on Monday morning and you're like, checking the news or whatever, or you happen to see forecasts and it's like, concern hurricane, well, then that's why. So that's just the concern about the PPSI and the POLA. It doesn't look too bad for now. Could change by next week over the weekend. So we'll see. With that said, though, SPY closed down about 1.15%, had a decent rally. Some buyers picking up into the close, maybe some people getting squeezed out of shorts. A little bit of that because I think a lot of people, we know. Go to the put call ratio. Put call ratio was super high at the open. So people buying puts like crazy at the open, tons. A little bit of put buying actually into that rally right there. A little bit of a perk in the put call ratio into that rally that we just saw. People probably buying puts for next week and beyond into that rally. Just using every opportunity of a bounce to short, right? So we'll see. I mean, it could be a little bit of squeeze action. It could be, going into the weekend, or it could be some actual buying. We'll see. But we got Powell next week, so the Fed's going to come out. Here's the current projections. The Fed's got their meeting on the 21st. Again, is there anything in this meeting that we're gonna be blindsided by? I don't think so. 21st of September, Fed's got their meeting. Looks like we're pretty much lined up for that 75 basis point rate hike. Pretty much set in stone for now, unless something crazy happens. That's where it's going to be, or that's the look for the Fed right into next week. So we shall see. We shall see. ZROR puts I sold will thankfully expire worthless. There you go. That's bounced. That bounced a bit. Oh yeah, we should look at the 10-year. Hurricane good for ExxonMobil. I mean, I have potentially. I have tried to play the correlations in the years past. Pretty bad luck in doing so, unless you're like really early. But it really would have to be kind of I don't know. It would have to be kind of a bad situation, or probably in the Gulf. I think the Gulf is where you're going to see more of a threat to oil rigs and stuff. So if this is not a threat to the Gulf, at least for now. I don't think it will be. So it looks like it's probably going to be fine, but we'll see. A lot could change, right? As we all know, a lot can change. ExxonMobil also is breaking down below this trend line too. I think I'll hold off selling puts for a while. Yeah, I mean, I guess the risk, right, is down. If we get further downside in the market and whatever, and bonds rip up, right, too, there could be some good risk on that. Don't pee in a foreign country. Waters, fish might swim up your noodle. Jeez. Yeah, I know. I got kind of paranoid when I heard about that from her, the parasite. I mean, and it was she had like gastrointestinal problems for like 5 years, and they were like, oh, just drink Miralax, so you'll be fine. And like, no, wasn't working. And then eventually this one doctor was like, yeah, they did some tests. You got a parasite. And it's like, oh, great, parasite. Annapolis, Maryland. Yeah, I mean, the risk obviously is this has the look of this storm-wise reminds me a bit. I'll pull up the U.S. model here. The European model, I mean, I haven't been super plugged in, but I'm not sure in terms of how accurate things have been lately. But in my experience throughout all of college and throughout high school and everything following this stuff, the European models have been, Europeans got the accuracy down on a lot of these forecast models, and better than the U.S. They obviously will change. The closer you get to the time of the event, the better the accuracy is. A week out, still a lot to be unpacked. But essentially you have the risk is seemingly kind of like almost, like the East Coast is in the biggest danger here. I mean, I don't think the Gulf seems like it's going to be avoided. It looks like the East Coast is where the danger is at. So yeah, has that Sandy-esque kind of, reminder, because Sandy did something like this. I mean, I lived in Connecticut, so I was very, very familiar with Sandy. Hurricane Sandy, that landfall in somewhere in Jersey Shore. But yeah, I mean, this Sandy had the chart. I mean, the forecast models were just saying out to sea, kind of curling up, out to sea the entirety of, for a lot of the time. And then all of a sudden, like 5 days out, 6 days out, you had some models that were like curl out to sea, slingshot right back in because of the upper atmospheric events that were kind of going on, low pressure, high pressure, depending on the movements of all that stuff. It sent it right back into the coast, which is pretty nasty. So we're gonna. I'll keep an eye on it. I like looking at this stuff, and I'm kind of pissed, but it's also a good thing that we haven't had storms. But I'm also kind of somewhat pissed in a sense because like I like watching how things play out, and watching models, seeing what models do well, like where things end up tracking, and then like the whole coverage of the storms is kind of cool. Being in them, I always say my like bucket list thing is I want, now maybe not like a huge crazy massive hurricane, bucket list thing is I want to storm chase a hurricane. Like I want to be inside of a freaking like landfalling hurricane, like in the eye. I want to be in. It's a bucket list as crazy as it sounds. Maybe not a category 5, but a category 2, category 3 is probably getting a little intense, but depending upon where you are, category 2 would be kind of cool to be inside something like that. Bucket list. Carvana puts. Yeah, let's see. Got potential for double bot. Let's take a look at Carvana. CVNA. Carvana, interestingly enough, this chart's not like terrible, but I can't imagine. I wonder how much has been priced in. I can't imagine that with the used car market really cooling off, I can't imagine this is going to be a great stock to be in, although it just had a massive destruction, so I don't know. But it's breaking below the 50 SMA. It doesn't look necessarily great. Technically, if it's building a higher low, if it can hold above $30, it's your higher low. So if it can hold $30, yes. If it can't hold 30, this is not looking good. All right, let's see. Carvana puts free money was the thought I had. No way bonds are going that low. And then they do. Got out of my Bitcoin as well. Got in too early, out of it too early. Made $100. That's all. $100 is $100 though. You know, at the end of the day, $100 or what's the saying? $20 is $20. Sounds kind of cool to be in the eye. Yeah, I mean, I would love to do that one day. It's not as scary, obviously, depending upon if you got debris and stuff coming up. But I would love to do it. Love to do it. Maybe I'll, you know, if I guess it was just recent making a joke because like I might be in the market for something at some point, car wise. So Carvana was something I've been kind of just peeking at, just taking a look. It's funny. I didn't look at the stock. I would look at the actual website. But I mean, they've been getting price cuts. I had a couple of things that I've starred. I'm not in the market until like January timeframe, probably end of the year. So, and the further we can push that, the better, ideally, because I just don't see that car market was super crazy inflated. It's going to need a lot of time for the air to come out of it. So the later the better. But at some point, I'm probably going to need to do something. So hopefully we can push it out. But yeah, I've just been seeing price drops across the board, like day after day, you know, across cars that I've just kind of starred up and whatever. So kind of crazy to see, but kind of good, I guess, if you're looking to buy a car. In a perfect world, what you would have wanted to do was move from the suburbs to the city early, not had a car or sold your car like maybe like a year ago, and then go back to the suburbs and buy that same car back for way cheaper or buy a car back for a cheaper price later on. But yeah, buying a Lambo, absolutely not. I mean, I'm looking at like the cheapest possible options I can get is what I'm looking at. Potentially, I mean, it's not going to be necessarily a for fun vehicle. It's going to be kind of a necessary thing. So that's the idea. I mean, probably just I'm someone who probably wants to just lease. So I probably just like to lease something. Ideally, I'd like to pay it. I like to get or just essentially, well, maybe it's not the best for the credit score. I don't know. We'll see what happens. Ideally, I would like to just kind of just say, screw the lease, just buy the car, or not buy the car, buy the lease in cash and just up front cut me and maybe get a deal. Hopefully get a deal. I wouldn't do it unless you're getting a deal. If you're not going to get a deal, then no. But if you're going to get a deal, maybe get a deal on the car, buy the lease outright up front for 2 years, 3-year lease, whatever. And it would be like the lowest mileage lease. I don't need anything crazy. And then have that car for a bit. But we'll see. I mean, what I've been looking at is a couple different things in terms of it would just be like a pretty bit, just simple knock around, like not going very far. I'm moving. The only thing is because I'm moving out from downtown Austin to outside, about 15 minutes outside of downtown by the end of the year. So that's why, you know, we'll need it at some point. I've been able to walk a lot now, but not so much going to be the case if you move 15 minutes out of downtown. My SQM short idea plan out. What do we got here? One day. So off those highs, yeah, if it can't break or it can't hold up over that 115, right? This looks like it's got some room to come down for sure. It's been very strong, to say at least. But if it's getting rejected, kind of double top up there, yeah, it's not a bad spot. Storm Chaser be crazy. No, I'm telling you, when it comes, because that's my background. Like I literally went to school for media. Like I legitimately am a meteorologist. Like if you want to call me that, like I have a degree, like in that, technically speaking. My minor was energy business finance, so I kind of went that route. Second half of my, I went in thinking like, okay, meteorology. Then I was like, okay, no, let me just scoot this way. But yeah, I mean, as I went through it, I'm like, I don't want to be the guy on TV, but I would love to be the guy chasing storms. Like that would be cool. But then I think back, I'm like, well, I don't want to be on the road all the time because that kind of sucks. And you're just like, it's not the best routine, but here and there, it could be kind of fun. So we'll see. Played cold again this week. Pretty nice. It's had a nice push back up on cold. I got out of cold in the 11s or something like that. Could I have squeaked out a few extra bucks? Sure. I just funneled that money into buying TMF. So I bought TMF and I want to buy more, but I funneled that money into TMF. 90s Honda for summer, $500. Yeah, it's crazy because my dad had inherited a Honda. And at the time, I think I had like 20K miles. It was like a 2000, I don't even know, 2012 maybe, something like that. I don't know. It's like 10 years old now. They still have it. And when he inherited it, they had to kind of go through like, okay, what's the value of the car? They get the value, blah, blah, blah. Okay, it's this. He could have sold that car like 2 years later or 2 years after he inherited the car for like 50% more. 50% more than what the value was when he inherited the car. Like insane. And it was like a used like 10-year-old Honda. Like, geez. Honda Civic. But he still drives it around. Now it's like, yeah. Free car, right? Or in a sense, right? It works. Why am I gonna buy something nice if it works? This is doing the job, and that's the way I feel. Like obviously everyone's like, oh, like people like, oh, I like the cars, and for social media purposes, oh, it's cool to have a sick car, right? Whatever. Dude, Hyundai Elantra is like the cheapest lease you can find. Sign me up for the Hyundai Elantra 2023. Like I don't care. YouTube weather channel Hawaii. Maybe in the future. I was thinking about joking around, but like, if some of my friends ever get fired from their line of work and they're like, hey man, I want to get into something and like, I don't care about my reputation anymore in terms of like, you know, being able to kind of say what you want almost, in a free way, like without having, cause like when you're under these, you know, if you're working for, you know, wherever, CBS, Fox, this, that, NBC, like, you know, you gotta be careful in terms of what you say. You can't, you know, be going crazy on social media. And so we joke about it, but like a full-fledged, we don't hold back, we say it like it is, like type of weather-related channel would be hilarious. Like it would be all for fun. So it's not something that like I'm necessarily have the time to do right now. But if I had some partners involved, like, and we can put something together, it could be a fun future endeavor. Maybe want to buy a TLT Leap. I really like the TLT Leap idea. I really do. If we just take a look at TLT's chart again, realistically, like, you know, like what do I think we can get on TLT? TLT moved. Now it's not the 10 year is not the best perfect proxy. This is the 20 year, this, you know, versus whatever. But if we had a move of TLT from 108 to about 120. So what's that? If you do the percentage wise, it's like 10%, right? Roughly. Yeah. It's like 10, 11%. I think we could probably 2 to 3x that on the next move on TLT from wherever it decides to bottom. So that would put us probably at, you know, looks like 130 to 140. I think that's a much more realistic area on TLT. But do I really care, or do I really know what the timing of that is going to be? I don't know, man. I mean, it could be 6 months to 12 months to 18 months to 24. It depends how long this takes to play out. So we got to play it, you know, play it like that. Kyle's heading out. Peace out. Have a good weekend. I'm going to wrap things up here too, because it has been a week. Let's just say that. All I'm going to say is, well, I'll mention it in tomorrow's video, but it was I'm disappointed. And this week, for whatever reason, just felt like mentally draining. Not that it was like that intense of a week. Like, oh my gosh, like I wasn't making a million trades or this and that. I was like, okay, like this CPI came out, it is what it is, and you adapt and adjust from there. But it just felt like I just made some poor decisions. I left a lot of money on the table. I threw some money away, essentially, is how I feel come the end of the week. But you live and learn, you move on, and the next week the market's open, and the week after that the market's open, and the week after that the market's open, and the week after that it's open again. And I think I heard the week after that it's open again. So we'll be back at it again next week like usual. We'll do a pretty long stream for the Fed meeting on Wednesday. Powell will have his speech. We'll have all that stuff live. We'll go through that, all that great, really fun stuff that we're going to get into. But biggest takeaway from this week, or from finishing off this week, is this right here. If I zoom in on this, or I refresh this page, put call ratio is spiking up, guys. I mean, it popped back up, 5-day average, pop right back up. Today at one point today, we hit the highest level on the put call ratio, you know, since April 2nd of 2020. It's like, oh my gosh, talk about bearish bets, you know? So that's that. Appreciate it. I appreciate everybody for tuning on in. The only thing I ask is a thumbs up on the videos, on the streams. That is something I don't ask enough, honestly, but it really does help. And potentially we'll have a Discord in the works, free, 100% free Discord in the works, just so we can have more chats like this, more talks like this, I guess, at any time, in the future. So we'll see. I'll be looking into potentially setting something up this weekend. I got my brother who may be interested in helping out, so that could help ease some of the burden off of me a little bit in setting it up. So that is the thought process. Appreciate you guys for tuning on in. Hope you have a great weekend. Get outside, and I will be seeing you guys Sunday night for a stream, and then we'll be back at it Monday, Wednesday, Friday for streams next week. Peace out. Enjoy the weekend.